recording. There's nothing that feels better to us eBay sellers than getting valuable inventory for free. Not just a good deal or from a clearance rack, just fast-moving, high-dollar inventory that you don't have to pay for. And the most common way sellers do that is through consignment, or selling other people's stuff instead of your own. The first time you hear about it, it almost sounds too easy, right? Like you've unlocked some sort of glitch in the system. But in reality, getting inventory for free through consignment is one of the fastest ways to make your business way harder than it needs to be if you're not careful. Done wrong, consignment drains your time and your margins and your patience while derailing your existing reselling business. But done right, it can grow your business dramatically without tying up precious cash. For example, I do this part-time, and this year I've made nearly $7,000 in net profit from a single consignment deal in less than 5 months. That's some amazing inventory that I paid no money to get and made a huge net return. In this video, I'm going to show you exactly how to do consignment on eBay the right way, how to research inventory before you make a decision, what questions to ask the owner before you agree to anything, how to structure the deal, how to organize inventory once you take possession, how to handle reporting and payouts, and what you need to think about when it comes to taxes. Because if getting good inventory for free sounds too good to be true, well, sometimes it is, just not for the reasons you think. So let's dig in. Now, consignment is simple in theory, right? Instead of buying inventory yourself, you list someone else's stuff and split the profit when it sells. You're basically acting as the storefront, the marketing, the shipping department, the customer service team for someone who doesn't want to deal with any of that. That's the service you're providing in exchange for inventory at no upfront cost and a cut of the profit later. But the part that makes consignment hard isn't the selling, right? You already know how to do all that. It's the complications that a consignment deal adds to your business if you don't do it the right way, along with the expectations the owner brings with their inventory. You see, most people who want to consign their stuff with you walk in with 3 incorrect assumptions. Number 1, they think their stuff is worth more than it actually is. Number 2, they think it'll sell faster than it realistically does. And number 3, they think they're going to make way more money than they really will. And look, they're not dumb. It's just because they don't understand the market or how pricing actually works on eBay or how long it takes to turn inventory into cash. If they understood that stuff, they'd probably just sell it themselves. And all this makes selling on consignment tricky. You're doing all the work without actually owning the product, and that basically changes everything. You don't control how the owner feels about pricing or timing or patience, but you still absorb the frustrations when those expectations collide with reality. So a lot of sellers end up thinking consignment just means easy inventory, when it actually means borrowed inventory with emotional weight attached. And if you don't treat it that way from the start, free inventory turns into a lot of work for very little reward. In a few minutes, I'll show you how to spot these situations and avoid them before you ever list a single item on consignment. Now, before we dig into the first step here, which is research, I put together a free downloadable consignment package just for this video. It's nothing complicated here. It's just the stuff that I use, like a spreadsheet for research, the questions I ask before agreeing to a consignment deal, a sample contract template, and a few other tools so you're not making all this up as you go. It should give you a good head start on your next consignment deal, so check it out in the description below. Now, before you think about how to structure a consignment deal or what sort of split to suggest, you need to understand what kind of inventory you're even being offered in the first place, right? This is where research comes in, and it's the first step to putting together a consignment deal that's rewarding for both parties. Consignment isn't about how much stuff someone randomly hands you. It's about how much of it you can actually sell and for how much. So the first thing I do is research the same exact way I would at a garage sale or a thrift store. I'm trying to learn 2 things, right? What the inventory is worth on eBay and how often it actually sells. Because a room full of inventory with no buyers is now your storage problem. And when it comes to research, what I'm about to say is the single most important thing you have to keep in mind, which most new sellers forget. With consignment, your standards of what you consider to be worth reselling actually have to be higher than when you're sourcing for yourself. Like, here's an example. If you find a $5 toaster at a thrift store that sells for $50 on eBay, that's a pretty decent deal. After fees and shipping, maybe you pocket $30, and that might be worth your time. Now take that same toaster on consignment, you're still doing the listing and the packing and the shipping and handling messages and all that stuff, but now you might only take home $15 or $20. It's basically the same amount of work, but half the money, and that's the mental shift a lot of sellers don't make soon enough when thinking about consignments. So when you're researching inventory for a potential consignment deal, you're not asking how much is this worth, you're asking is this worth splitting? Now the research process here, it doesn't have to be complicated, right? I open a spreadsheet and I start checking comps on what's being offered. I look at price ranges for sold listings. I look at how often the item sells. I get a feel for what moves and what just sits. And by the way, if you want to use my research spreadsheet template, you can find it in the consignment package I talked about earlier, linked down below. And when doing this research, you're not trying to come up with a perfect valuation. It would just be impossible. Instead, you're trying to answer one question: is this deal even worth doing? So figure out exactly what's being offered and sit down and do the work to see if it's worth selling for someone else, keeping in mind you're going to take home a split of the profit. And this all may sound daunting, but it's a critical step if you want to avoid losing money. And it usually takes less time than you think. You may not need to look every single item up, but you do want to get a rough sense of what you're working with here. Now, at this point, you're probably thinking, is there a minimum potential profit you need to make for a consignment deal to be worth doing? But unfortunately, it's just not that easy, right? It's like buying one-off items on your own to resell. There's a lot of factors to consider beyond potential profit when deciding whether to buy or not. I might be okay with lower profits if the item sells quickly and is easy to list and ship, but if they're slower movers or take more time to list or need some specialty box, my baseline might be higher. And we each value our time differently here. So whether a deal is worth doing or not is going to be something you need to answer for yourself. Now, once you understand the inventory you're working with, the next thing you need to do is understand the person, because consignment only works when the owner's expectations line up with reality. When they don't, things get uncomfortable fast, and the only way to avoid it is asking the right questions up front. This isn't a formal interview or anything like that. You're just trying to understand what they actually care about. I always start by asking why they want to consign in the first place, right? I'm trying to figure out, are they emotionally attached to the items? Are they just trying to get them out of the house? Do they need money quickly? Are they fine if it takes a year or two to realize the full return? Then I ask how they think it's going to go, right? What do they expect things to sell for? How fast do they expect these things to move? And what happens if something doesn't sell at all? Do they want the item back? Do they want me to donate it? These answers are going to tell you a lot. If someone believes every item is special and should sell immediately, you're going to be managing expectations the entire time unless you tell them how this actually works. I also pay attention to flexibility, right? Are they open to pricing their stuff based on the actual market value, or are they already anchored on numbers in their head? If they're not willing to budge on pricing, maybe that's okay, but they need to understand that it'll significantly increase the time to sell, for example. Then I ask about things like communication. How often do they want updates? Are they hands-off? Do they want to be involved in decisions along the way? All of this is about figuring out whether this is a business relationship that's actually going to work. And again, if you don't want to remember all of this, I put together a list of questions that I ask in the consignment package linked down below. It also includes a sample starter contract, which we'll talk about in a minute, so that you're not guessing your way through any of this. And once you've done the research to understand the total eBay value and the demand behind it, as well as the person who owns the inventory, then and only then does it make sense to even talk about how to actually structure a deal. The best consignment deal is usually the one that you don't consign at all. If I can buy the inventory outright, I almost always prefer to do that. Not because consignment is bad, but because ownership is just easier than partnership. When you own the items, you control the pricing and the timing, all that stuff. There's no payout schedule to manage, no emotional drama from the owner around what something should sell for. You just run your business like you always do, and it's much easier. So anytime consignment comes up, my first question is always whether a buyout makes more sense. A lot of times people just want their stuff gone, or other times they don't realize what consignment actually involves, or that it might take a year or two to sell everything. And sometimes when you put cash on the table, that ends up being the cleanest deal for everyone. But when buying isn't an option, consignment often becomes the right tool. And when it does, the next thing you need to understand is that there is no correct percentage. The split depends completely on the inventory. You could be looking at 3 high-value items worth $10,000 each that take almost no time and effort to sell, and you might be perfectly happy doing that for 10% if that's what the owner's asking. Or you could be dealing with 800 slow-moving items that require months of listing and photos and storage and questions and returns, and you might need 70% for it to make sense. That's why research always comes before the math. As a general rule of thumb, though, I always start with the idea of a 50-50 split after fees. If it's more work for lower demand stuff, that percentage might need to go up to make it worth my time, or if it's less work with higher demand, I might be okay with that percentage going down, but 50-50 is a good starting point. I also like the idea of an even split after fees because it signals to the owner that this is a partnership, that we're in this together, and that helps set the right tone going forward. This is especially important important if you think this might be a partnership that could extend beyond a single deal. You might be able to squeak out a few extra percentage points on one deal, but risk the opportunity to sell even more from them in the future. But here's the part you have to make crystal clear to the owner: what the split actually means in dollars. If something sells for $100 on eBay, that doesn't mean there's $100 to split. After fees and shipping and promotions and whatever else, maybe there's $60 left over. And if you're splitting 50-50, the owner isn't getting $50, they're getting $30 on that $100 deal. They need to understand that before any deals are made here, because what blows these deals up isn't usually greed, it's surprise. If someone hears 50-50 and mentally pockets $50 on a $100 sale, you've already got a problem that you don't know about. Your job is to make the math boring and obvious and impossible to misunderstand from day one. And once you've agreed on a split that actually makes sense for both of you, don't move another inch until it's all written down. A verbal agreement might feel okay in the moment, but memory gets blurry the second money shows up. If it matters, it belongs on paper. Writing it down isn't really about being legal, though that can matter too. If you're creating a contract because you fear a legal situation in the future, you might want to question whether you're doing business with the right type of person. Instead, getting it down all on paper is more about being clear. A simple agreement forces both of you to answer uncomfortable questions before they turn into problems, like who controls pricing, or what happens if something doesn't sell, or when does a payout happen, who pays for shipping and returns, what happens if something gets damaged. None of that stuff should be guessed. The consignment agreement that I use is included in the consignment package linked down below. It's not fancy or anything, but it covers the stuff that's likely to cause tension later, and you should repurpose it to suit your needs. It includes assumptions pulled straight from the questions you hopefully asked the owner earlier in the process, like on what schedule you'll get listings live and whether they want to pay to promote, and what happens to inventory that doesn't move after a certain amount of time, or who covers the cost of shipping materials, stuff like that. That way nobody leaves with a different version of the deal in their head. You don't need a huge contract, you need a shared understanding. And once all that stuff's on paper, you can stop negotiating and then start working. Once you take possession of consignment inventory, your job starts immediately. You're no longer managing your own stuff, you're responsible for someone else's. That means you need to be more organized with consignment inventory than you ever are with your own. Now, you can use whatever system you want for this, right? A notebook, Excel, Google Sheets, Airtable, doesn't really matter what tool you use. What matters is that you track everything cleanly and consistently. You need to know what you received and where it is and who it belongs to and whether it's been listed or not, or whether it's been sold, or when it does sell, how much it sold for, and what the expenses were, and what the split is, and whether it's been paid out yet, all sorts of stuff. If you can't answer those questions instantly, consignment becomes chaos, and you'll be buried under a mountain of paperwork every time you need to do a payout. Personally, I run all this through Flipwise, so when consignment inventory comes in, I log it as unlisted inventory and assign it to a purchase location using the owner's name. That immediately segments everything related to the deal, like the listings and sales and refunds and profit, and it puts it all under that one relationship. So nothing gets mixed in with my own inventory or with other consignment deals. Everything is separate, which is really important. I set the cost of goods for each item to zero, not just because I paid nothing for them, but because it gives me a clean net return after fees when the item sells. Again, that's not my profit in the business sense, but the amount available to split between me and the owner later, depending on what percentage we agreed on. When something sells and the order has shipped, Flipwise automatically pulls in the sales data. At that point, I log the owner's share as an expense, so if an item nets $84.50 and the split's 50-50, I log an expense for $42.25. I assign it to the owner and I mark it as not yet paid. That keeps everything clean, so I always know what I owe and who I owe it to and what sale it's tied to and whether it's been paid out or not. Because everything is tracked in one system, for each consignment deal that I have going, I always know what's listed, what's sold, what's still sitting, and exactly how each deal is performing. Like, for example, this deal I did 5 months ago had 238 items. I spent nothing on it, of course, and the total list value for everything still unsold is around $11,000. This deal has grossed $17,000 so far, and we've each taken home a profit of almost $7,000. Being this organized eliminates the biggest risk in consignment, which is confusion. Confusion breaks trust, and the moment you start saying things like, I think it's sold for, or I'm pretty sure I already paid that one out, you're already in trouble. The bottom line is you don't want to be guessing about anything, you just want to look. And when it's finally time to report and pay out, which we'll get into next, the work is already done. I handle reporting and payouts at the same time, once per month. At the end of the month, I report and pay out on the previous month's sales. So when I send a report at the end of November, it reflects what sold in October, and the payout that comes with it is for that same time period. This gives enough time for returns with a 30-day return window and keeps the numbers clean before anyone gets paid. Each month, the owner gets a payout along with a report showing a full breakdown of what sold in that month, how long it took to sell, what each item sold for, what the fees were, what the net was, and what their share comes out to. So there's no mystery math and no explaining things after the fact. The report breaks everything down for them. And sometimes if something big or exciting sells, I'll reach out and give them a heads up, but everything official runs through that monthly report. That way nothing gets lost in text or email. And generating the actual report each month takes like 2 seconds because everything's already been logged automatically. I just select the time frame and export the report and send it along with the payment to the owner. The math is already done, the split reflects what we agreed on, and the numbers are clear. Again, everything I'm showing you can be done in a notebook or a spreadsheet. Flipwise just automates it. It's not required. But your job isn't done yet. Consignment doesn't just change your workflow, it changes your paperwork and your tax situation. When you sell on consignment, the income still runs through your eBay account. And that means from a tax perspective, that money shows up as your revenue, even though part of it really belongs to the person you're consigning with. So you have to handle that correctly on your books each year. If you remember earlier, I showed you how I logged each split as an expense when something sells. That also does the job of lowering my taxable income because I'm not actually keeping that money, right? I'm just passing it through to the owner. So for example, on a $100 sale, eBay tells the IRS I grossed $100. And it's my job to tell the IRS that I had $30 in fees and paid out another $30 to the consignment partner, so I really only made $40 of taxable income out of that $100 that eBay said I did. Now, this is not tax advice. I'm not your accountant. You should talk to a professional about how to handle this properly for your specific situation. But the point is, consignment adds a layer of responsibility. You're no longer selling stuff. You're acting as a middleman for the other person's revenue that technically flows through your own business. And if you don't handle that cleanly, it's going to get really messy really fast. At the end of the year, the Flipwise tax report will total up all of my expenses, including those payouts I made to my consignment partners, and my total taxable income will be reduced to my actual net profit after paying out my partners, so I'm not covering the full tax burden of my required to do. This is another reason I don't wing consignments, right? The money is real, the reporting is real, and the paperwork is very real. There are real-world consequences for not doing it by the books or being disorganized. If you don't respect that, doing consignments could literally cost you your business. So at first glance, consignment looks like the holy grail of reselling, right? Free inventory, no upfront risk, instant scale. But now you can see why it isn't actually free, not even close. It's a business relationship with expectations and accounting and records and communication and real consequences layered on top. Treat it casually and it's going to crush your business with chaos, but if you treat it professionally, it can grow your business faster than almost anything else. Again, if you want the tools I referenced in this video, the research spreadsheet, the question list, the agreement template, they're in the consignment package link down below, so check it out. So remember, consignment isn't free inventory. It's borrowed inventory, and the difference matters. And lights out. So if you're new here, usually at this point in the video, every week I talk about my weekly sales and my top 10 sales and things like that, but I was out of town, so I didn't really have time to put all that stuff together after making this video on consignments, but I'll be back next week with all of my weekly sales and my top 10 sales, the best thing that sold. But yeah, I hope you enjoyed this video. I hope you can go out and find some good consignment deals. Just be careful. I decline more consignment deals than I actually accept. So I'm very, very particular about my consignment deals. They have to be really good inventory. So anyway, best of luck. I hope this helps. We'll see you next week.